It's a question that has been on everyone's mind. Will the stock market end the year up or down? The stock market has been a roller coaster for the past few years. But with the end of 2022 just a month away, it's time to look at what the future holds for this popular investment vehicle. Whether you're an investor or just someone who likes to keep up with the latest news, here are some things to consider about what's coming for the stock market. Hello and welcome back to another interesting episode of Financial Ventures. In this video, we'll be looking at the current situation of the stock market as we near the end of 2022. I also urge you to keep watching until the end because not only will we tell you the experts' take on this topic, but we will also let you know what will happen if the stock prices drop. If you've just discovered this channel, you should know that every week we upload new videos. Therefore, if you want to stay up to date, make sure to subscribe and click the notification bell. With that out of the way, let's get started. What is an ETF? In order for us to understand the topic, let's dive right in first with a definition of ETF or index fund. An index fund is a type of mutual fund that tracks the performance of an underlying group of securities, such as the S&P 500. They are designed to give you a return similar to that of the market without requiring you to do any research or make any decisions about which stocks or bonds to invest in. Index funds don't have a specific goal like dividend growth or capital appreciation like other types of funds might have. Instead, they simply try to match their benchmark by buying and selling stocks as necessary, making them an easy way for investors who want easy access. So what's the problem now? Think about it. ETFs, exchange traded funds, are just a bunch of stocks put together into one big basket. You can buy them and sell them in one fell swoop, so they're super easy to trade and they're super accessible. You don't have to be an expert trader or anything. You just need an account on an online broker and a little bit of cash. But here's where things get tricky. Their convenience and accessibility are also their downfall. Why? Because everyone wants one. But who is Michael Burry? Michael Burry is the founder of Scion Capital, a hedge fund in California. He's also the inspiration for Dr. Michael Burry, the main character in the film The Big Short. Burry was born in 1971 and grew up in Southern California. He went to Stanford University before transferring to UCLA, where he graduated with a degree in economics. After college, he worked at various investment firms before founding his own hedge fund. Burry's big break came when he decided to bet against subprime mortgages. These are mortgages given to people with bad credit, and won big when subprime mortgages collapsed during the 2008 financial crisis. Now, keep watching because in a minute, I will tell you why you should believe Michael Burry. But before that, like and subscribe to the channel so you're notified every time we upload a new video. If you're done subscribing, let's go back. Why should you believe Michael Burry? Not only is he one of the most successfully renowned investors of all time, but his success ratio in the stock market is a staggering 90%. Don't believe what I say? Let me give you an example. At the beginning of 2021, he forecasted a massive increase in inflation and cautioned investors about an impending decline in the stock market. What is a bubble and could it be a threat to the market? Let's understand the so-called market bubble. A bubble is a situation where the price of an asset gets so high that it is unsustainable and will eventually crash. A bubble can be caused by any number of factors, but they typically involve a lot of hype, speculation, and other factors that are not based on reality. Bubbles are usually associated with speculative investing. Investing in something because you think it will go up in value rather than because you believe it's inherently valuable. And they can threaten the stability of the market if they get too big or too widespread. You will understand it even more with an example. If you observe that the market is failing and widespread selling is occurring, the volume is expected to decrease, which may even cause the stock prices to die. There will be a few buyers, but there will be many people willing to sell. After that, the players who are the most desperate will determine the price. Here's a perfect scenario. Imagine that you're with thousands of people going to a mall. If there's an influx of people coming in, there are also people going out, and that's perfectly fine, just the way it is. But what if the place is burning? Of course, you would expect that people would run out of the area and no one would dare to enter because of the danger. If this continues to happen on an unprecedented scale, the stock prices will die. Want me to add an insult to the injury? Here it is. Now, I want you to remember what Michael Burry said about the difference between now and the early 2000s. Remember passive investing? What would happen if these passive investors leave as well? They'll crash everything. What happens when stock prices drop? It's a well-known fact that investors panic when they see the stock market drop, and it happens all the time. Every time there's a drop in the stock prices, investors get nervous. They don't know if this is just one of those routine drops that happen every now and then, or if it's more significant than that. So they start getting worried, and then they start selling off their stocks. As soon as the news get out that the investors are selling off their stocks, other investors start doing the same thing, and pretty soon, you've got yourself a full-blown panic situation on the move. The stock market, like the weather and elections, can be difficult to accurately predict. When it comes to stocks and their value, there are a lot of variables that are purely out of our control. However, with a little bit of data, crunching, and an understanding of the market, as well as taking into consideration what experts say on this matter, we might just find some suggestions worth following. What do you think about the stock market as 2022 ends? Will it crash or not? Let us know your thoughts in the comment section below. It's always a joy engaging with you all. Also, don't forget to like and subscribe to the channel for more videos like this. Thank you so much for sticking until the end. See you in the next video, and always keep in mind that in your life's adventures, it's better with financial ventures.